Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today, we're going to talk about credit, ladies and gentlemen. That's right, you can get credit. You can see the links down below in the description. But I'm going to talk about some other things, a warning. Because getting credit right now, the credit rates are going to increase, which means you're going to owe more money unless you pay it off within your 30-day cycle. So we're going to talk about that and much, much more. And welcome to Foci Optics. Check. Stop struggling now gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back, ladies and gentlemen. And once again, please share the videos so you can help 1, 2, 5, 1,000 other people, or millions. You never know who you can help. So let's get into it, because the bottom line is you need a better credit score when the economy goes bad. So let's start with the first parameters, because you know there's 5 little buckets that we have to worry about. We have to worry about on-time payments. That's right, your payment history is going to matter, ladies and gentlemen, to optimize your credit, and that's a big chunk of your credit score. Next, we have to talk about debt utilization, which is even a bigger chunk of your credit score. What the debt utilization is, they call that amount owed now. They're trying to change the terminology on you. And that's right, ladies and gentlemen, we have to talk about amounts owed, because you have to be under 29% of amount owed. So I'll keep it simple. If you have $1,000 of credit limits on your credit cards and you have $290 or less, that helps improve your credit score. But if you have $301 or more, because that's over 30%, that could be a detriment to your credit score. And to optimize your credit score, you want to be under 10%, ladies and gentlemen, under 9%, ideally under 7%. So that means $1,000, $70 or less owed during your payment cycle. So keep that in mind. That is very important. And so when you know those are the first 2 buckets that matter, those are things that you have to pay attention to. So let's keep moving along, shall we? Because the next thing you're going to have to worry about is new credit. They want you to get new credit, ladies and gentlemen. Of course they want you to get new credit. Just think of credit as an enemy. Let's call it that. But you need credit to get cars, homes, into apartments, and a few other things that you want to do along the way, because they're checking credit for energy bills in a lot of cities and states now. They're checking your credit when you go get a job. So therefore you can't ignore it. And that's why you can use Smart Credit. That's right, the link will be down below. You can use Smart Credit to monitor your credit and see how you can improve your credit in real time. It's a beautiful thing. So down below, use the link. You get a small discount when you use our link down below in the description. Now, new credit mix. That is also 10% of your credit score, so that is a good thing. But that's not a heavy weight on your credit score, because on-time payment, debt utilization, those are the main things. And also, new credit is detrimental sometimes to your credit score, because length of history is also in the bucket. So again, if your length of history is over 7 years, that is beautiful. You want it 7 years or more. Just remember that. But if you get new credit, that could reduce you under 7 years, the optimal time frame. So we don't want that. But in order to improve your credit score, you have to get new credit, which is the weird thing. It's a cycle, ladies and gentlemen. But That's what I want to start this out with, because a lot of you are out here saying, let me get this credit. I have links down below for you to get credit. Installment trade lines, those are fixed. Just remember, that's a fixed payment. You'll see the $10,000 that you can get from whether it's Credit Strong. You'll see secured from Self Lender. You can actually get a credit loan builder and then get a secured card. Or you can go get a secured card from Discover. The link is down below. And then after 6 or 7 months, they change it to unsecured. There's ways to build your credit. But just keep in mind, more credit also means, here's the warning, ladies and gentlemen, it's flashing. When the Federal Reserve increase interest rates, your credit card bills can go up, because they're going to send you a notice, change of terms and services, talking about, we're going to increase the credit percentage. And that means you're going to have a longer time to pay it off, especially if you're doing min payments. So that's another thing. You don't want to do min payments. You want to improve your credit score rapidly. You need to get your debt utilization down. The amount owed needs to be dropped under 7%. 7% or less, that's where it needs to go. Set yourself up for success, and then use Smart Credit down below to monitor it. And then with Smart Credit, it also gives you some insurance, because there's a whole bunch of people out here trying to steal your credit, use your credit, and mess you up. And they have insurance that can help you with identity theft and things of that nature. So again, this is short, this is sweet, but it has to be building credit, ladies and gentlemen. You're gonna have to build it the right way, because they're gonna be cracking down. Just keep that in mind. When there's a bad economy, credit starts acting weird. They don't want to give it out. There's already some companies that have went out of business that have been lenders for housing, and you can't believe it. They just shut their doors. So this is going to be a thing over the next 2 years. So make sure you keep your credit up, and make sure you get it monitored, and make sure you stay on top of it. And with all that said, thank you for watching. Thank you for listening. And please like, subscribe, and click your bell below so you get the latest updates. And I know it's hard out here, and that's why I had to make this credit video, ladies and gentlemen, because credit's going to get worse. It's going to be where you're going to have a higher credit score to get credit. And then if you have existing credit, you're going to get notices talking about, we're going to increase your credit score. So keep that in mind. And with all that said, keep your head up, keep moving, and I'm out.